Bitcoin and the cryptocurrency space as a whole is all just fantasy land, right? How can we really value a token? How can we value Bitcoin when it's not really coupled to anything? When we buy gold, we know we can produce something out of that gold. We can produce some jewelry and there's demand for jewelry. When we buy oil, we know that we can turn oil into petroleum, and petroleum is used for transport, and we know at what point in time is transport profitable and when is it not profitable. This exercise can be done with pretty much any asset, right? Whatever raw material we have, we can derive what kind of demand could we get from the products that we make out of that raw material. Now for Bitcoin, there is no such thing. We can't produce anything out of Bitcoin. So how can we value Bitcoin? When it's all just fantasy, when it's all just imaginary numbers, at what point in time is it actually cheap? At what point in time is it actually expensive? How can we get some skill, some statistics into something that appears to be just a random guessing game? I believe the key to pricing Bitcoin is to figure out the psychological anchor points. So everybody that invests into crypto sees their current purchase price relative to the current market price. And if you're currently in profit, we might consider taking some of that profit and maybe allocate those gains into just consumption or potentially into investing in other asset classes. If we are in losses and if we long-term believe in the asset class anyways, we might not sell, right? We might just wait for the asset to get back into our entry position price or potentially above. And so for Bitcoin, the thesis is that Bitcoin isn't as inflationary as fiat currency, and that's why it should outperform fiat over the long term. It should become more and more expensive in US dollars. Now, what we see over here is the Bitcoin price starting in December of 2014 all the way to today. So that's this logarithmic scale here on the left. We see how sometimes we are in massive rallies, right, from $200 all the way to $20,000, to then see a price collapse down to $3,000, to then rally up again above 60,000, to then come down to 16, etc. Now we are close to 100. What we see here in purple, the line that is way more smooth, that doesn't go down that much, that's the realized price. That's the average cost basis of the market. That is the anchor point of the market. So again, if you've got your crypto portfolio and you look at what kind of price did you buy your different assets for, and you look at the current price, then you've got the ratio, right?
To get the full length video, feel free to simply subscribe over here. Then you get it recommended by the algorithm.